Hello everyone, my name is Paul Stevens and I'm thrilled to welcome you to this short-term rentals webinar on what happens when it all goes wrong, prevention techniques to avoid catastrophe, sponsored by Price Labs and Minute. I'm the editor of Short-Term Rentals and host for today's session, and as the background suggests, I'm recording this live from New York City on the eve of the STRz Short-Term Rental Summit. More on that very shortly. Before we begin, let's introduce our first webinar series sponsor, Price Labs. So a big thank you to Price Labs for sponsoring this webinar and series. And next we have our second series sponsor, Minute.
Hi there, we're Minute. We make home sharing work for everyone, hosts, guests, and communities alike. We've developed the world's first indoor and outdoor sensor built specifically for hospitality, and the only one that integrates with Airbnb. The Minute sensor monitors noise, occupancy, motion, and temperature. It's camera-free, so it protects your guest privacy. We can help you prevent parties and noise complaints, enhance guest experience, and protect your rental properties, just like a co-host would. When Minute detects noise, it notifies the host. It can also contact your guests via Airbnb messages, SMS, or an automated phone call. Similarly, you'll be the first to know when there's a risk of crowd, the AC malfunctions, or someone tries to enter your rental between bookings. And the best part is, you can install Minute yourself in minutes. That's why we're trusted by hosts and hospitality professionals in more than 100 countries. Find out more about how Minute can help you host happy at minute.com.
Thank you to Minute as well. So I'm hosting this webinar live from New York on the eve of the STRz Short-Term Rental Summit. Hope to see lots of you here tomorrow. More great news is that we are hosting our own summit with STRz in London on the 18th of October. And we'd like to reward our webinar audience with 10% off this event. So this page, you can see the code on screen, and that will also be placed in chat. So we're very, very excited about that later this year. In terms of webinar guidelines for today, please keep your sound on mute and your camera off if you're not a speaker. All of the details will be posted in the chat by my colleagues Joe and Ella, so please do post any questions you have there as well yourself throughout today's session. Our discussion will last around 45 minutes before we move on to some audience questions, and a recording will also be sent out to everyone within 48 hours of today's session. So let's kick off by introducing our speaker lineup for today. And we're going to kick off, please, with Woody. Please introduce yourself, Woody.
All right. Hi, my name is Woody Wade. I'm based in Switzerland. And what I do basically is help companies to identify or visualize, maybe is a better word, how their future strategic landscape could evolve. I mean, that's called scenario planning. And it's a part of the strategic planning process, or also part of the risk management process for a lot of companies. I'm not directly involved in the hospitality industry, but I am kind of a future-oriented person. So I very often come into discussions like this to bring kind of a here's how you should think about the future vibe to the whole thing. So very happy to be here. Thank you.
Thank you very much, Woody. Delighted to have you on board for today's session. And next we have Karen. Please introduce yourself, Karen.
Hi everyone, so I'm Karen Hanton. Let's see, I've been in the digital world for about 20 years. Founded Top Table, built to Europe's biggest online restaurant booker, exited in 2010 to OpenTable, the American version. Since that time, have done a number of startups and invested in various businesses, probably have investments in about 40 businesses by now. Some I possibly can't even remember. At the moment, very excited about Pets Pajamas. We're riding the dog-friendly travel wave, again, building out to be Europe's biggest, where dogs are truly welcomed as they are true members of the family. So very happy to be here today and love to talk about plenty of crisis. I've definitely seen plenty of them. Not sure about catastrophe, but anyway, we'll come on to that.
Yeah, we will. Well, that's maybe a good thing that you haven't seen too much catastrophe, but
Indeed.
there's lots we can get stuck in with.
There's still time.
Thank you, Karen. And next up we have Jacobie.
Hey everyone, my name is Jacobie Olin, and I'm the president of C2G Advisors. We are an M&A advisory firm, specifically here in the short-term rental industry. We do strategic consulting and M&A for short-term property management companies and for software providers. Over the last 3 years, we've done about 35 deals for about 250 million. And I'm just really bullish on the future of this industry and all the cool niches that are being currently built by these future entrepreneurs.
Indeed, looking forward to hearing all of your insights on today's session, Jacobie. Delighted you can join us. And last but by no means least, we've got Vinayak, all the way from Dubai.
Hi everybody, it's a pleasure to be here. So I run a vacation rental management company based in the Middle East, and we have 150 properties spread over India, Dubai, and Saudi Arabia. We like to place ourselves as a luxury service provider, which focuses on human engagement.
Thank you very much, Vinayak, and to all of our panelists today. Very happy to have you on board. So to add a bit of context to today's discussion before we really get stuck in, we've reported on a number of business casualties in recent years, of course, notably since the pandemic, including the likes of Stay Alfred, Domio, Lyric, Hostmaker, and Wander Jaunt. Many of these being property managers, but certainly not isolated examples of who has struggled during the pandemic or had to pivot. Other management firms, including the likes of Evolve, Vacasa, Sonder, and AdvanceStay, have all announced extensive layoffs this year, with many attributing this to market volatility and economic uncertainty. Many companies rehired employees, of course, en masse after the pandemic, but we're going to be looking at were these cases of unwise business planning or scenarios that couldn't have been planned for. Lots more to come on that today. And finally, what's next? We've seen just last week Hostaway raising one of the largest amounts in the vacation rental tech space. We've seen another acquisition furnished rental company Blueground, and companies like Vacasa have also seen their valuation plummet after going public. So this will all feed into today's discussion, and looking forward to speaking to our panelists. So I'm going to kick off first and divert this first question to Woody. Of course, as you mentioned there, you're the sole panelist here today that has no real background in the hospitality space, or is currently involved in that.
Right.
But
ignoramus is the word I would use here.
I'll let you use that. But
Okay.
with your current company, you talk about sort of applying these structured scenario planning methodology to specific strategic situations. I've been researching you on LinkedIn and your various resources as well. You've talked about COVID and Ukraine. But could you just expand on some of the challenges that you've seen businesses go through in recent years, and also how they have maybe overcome some of these issues?
Okay, well, that's a big order. Essentially, let me jump back a moment to the slides that you were showing. So you're showing now certain companies were affected by uncertainty in particular, right? I mean, uncertainty is a kind of a vague word, but basically it kind of means that, nobody knows what's going to happen and you're not ready for it, and boom, the crisis occurs, to you at least, right? Now, I'm the last person who would ever blame the management of a company for not being able to, perfectly foresee what's coming down the line and prepare for it perfectly, and therefore, just sail through the tough times. That doesn't happen really in real life. However, having said that, I do think there's value for any company, in this space in particular, because I think some of the winds of change, let's say, are blowing pretty hard in all of the hospitality arena, thanks to COVID, or at least COVID accelerated some of these trends. So it kind of behooves any manager who is responsible, or a management team that's responsible for the future success of an organization, to try to think about what the future actually has in store. Now, of course, everybody does that, and we all know the future is going to be different from today. It's just a given, right? But how is the future going to be different? And that's the key question. And so a process like the one that I normally propose to a management team, scenario planning, is like you mentioned the word structured, and that's the important thing. It's not pie in the sky. It's not, oh, let's just dream up some futures. Oh, wouldn't that be cool? And wouldn't this be great? Let's leave that to Hollywood, and fantasy land is, something for the movies. We all love that. But, when it comes to actually making strategic plans and strategic decisions today, what you need to do is to be able to have a logical, rational, structured way of thinking about how the future could realistically change. Now, scenario planning is one of a few different tools for that. I wouldn't say it's the only one, but it's the one that I like because it's the easiest, really. It's just based on the idea that there are a small number of critical uncertainties that every company faces, right? Now, a lot of, some of these critical uncertainties are ones that we will all face. COVID, for example, right? But others will be much more specific to an industry, or even to a particular country, maybe even a particular city, and to a particular company. So it's not that any two organizations can use this kind of cookie cutter approach. But what is valid, or what's valuable, let's say, for them, is to go through a process that helps them identify where the dangers might be. The title of this conference is all about, things going wrong. And I thought, oh, that's very pessimistic. But on the other hand, things do go wrong. And when they go wrong for your company, it's your company's at risk, but also all the people who work for you, the financial underpinnings of you, your company, your coworkers. There's 100 different reasons, or 1,000 different reasons, why you should actually be more proactive in trying to come up with some kind of a strategic response and have it ready for these contingencies. But you have to think what the contingencies are first. Now, I probably didn't really answer your question, did I? What? Come back to your question again. You asked me, are there real examples?
I think that was quite good, actually, and we can expand more on the strategic planning in a bit. So
okay.
We'll revisit that in a future question. But
Super.
Thank you first
Pleasure.
For that, Woody, and Karen as well. We last saw each other at our Urban Living Insights in-person event in London just a few weeks ago, and we were listening to you talking about the various industries that you've been working in with pets pajamas. You've worked in hospitality and in the restaurant booking service as well. So there must have been an element of strategic planning, and you've sold businesses, you've co-founded as well. From your perspective, what do you think COVID has shown businesses of all kinds, whether it's hospitality or whether it's the Woody who works with companies outside of hospitality? What do you think that's shown about how they maybe had to rethink their relevance or adapt their offering for audiences?
Yeah, I think COVID, when I have to think about this, I think about two different things. Catastrophe, which is sort of like a major event. I mean, it's kind of really properly sort of business threatening, life threatening, every kind of threatening. It could be the end. That's what I think of when I think of catastrophe. I think crises, different. As a sort of an entrepreneur, I think I'd be interested in sort of other views on the panel and people listening too, they probably relate to it. I think being an entrepreneur, if that has to be defined in a way, I think by nature you are a problem solver. And you maybe the first time you do a business, you are blissfully unaware of the fact that from morning to night you have to find solutions to things that go wrong. Nothing ever goes the way you want it to go. So I think there's crises that happen kind of fairly frequently. Some of them are made by yourself, some of them are sort of outside influenced. I think the thing that speaking to other entrepreneurs and definitely from personal experience, say COVID was the nearest thing to a catastrophe that I've certainly experienced, in the sense that my business was shut down for, you know, it's still affected, you know, it's affected years later. Some people might say, and I myself would say, there are elements of what happened that were fortuitous in a business context. Let's accept it was a human catastrophe. But if I'm talking purely about business, there might be things that were precipitated by that event that possibly should have been dealt with before. And I hear a lot of entrepreneurs say this. Somebody said to me the other day, who's just sold their business for many tens, possibly 100 million, that COVID was the thing that focused their mind most of all on what they needed to do. And when they came out the other end, they'd completely refocused and reorganized, kept the good bits, not the other bits. A year and a half later, had got some great value from it. So the idea that it's just one-way traffic, I think it obviously isn't true. I think there are different levels though of things that could be called a catastrophe. I was an investor, for example, in a business called, I can say this because it was public knowledge, called Pay As You Gym. And it was a subscription service like ClassPass, so a hospitality type thing. And their database got hacked. And it was a near-death experience for the company, and the company never actually recovered. It never recovered. It sort of got over it, and it had to, you know, they demanded £250,000, which possibly they even paid, but the company actually never recovered from it. But I'm very aware, like Woody, that I am now rambling and probably not.
Not at all. That was
no, Woody,
interesting.
it's the only thing you mentioned. You'd forgotten the question. I think I did as well.
But we've got plenty more time to revisit those anyway. So
okay.
Very, very interesting there to hear about that and how the planning aspect will come into an event like that. I'll move on to Jacobie as well next, because again, you're coming from an investment and M&A angle here. And I don't want to focus on COVID specifically too much, but when you've seen the challenges faced by, say, urban and leisure operators who you work mostly with, what are the key challenges that most people have been encountering, and how have they sort of managed through that time? Jacobie.
Sure. So thank you. I think it's important to kind of bifurcate these two types of operators. There's and it goes from the slides you showed. Kind of that first slide was the urban multifamily operators, and then the second slide was more of the leisure, the beach, ski, mountain, single family operators, and they're both where they are today. But their journey to where they are today over the last several years cannot have been any different. Taking the urban players first, the 20 teens was all the rage with them. The fundraising was unbelievable. They were getting pushed from their investors, grow at all costs, signing leases well above market rate. And they had a similar comp to themselves in the co-working space, where obviously it was a different guest demographic, but the actual product, the class of product, they were all searching similar types of products and then similar types of markets as well. And what happened to them was actually predated COVID. Their first kind of obstacle they had to face was WeWork's failed IPO that happened in late 2019. And that had a ripple effect on not only just co-working companies trying to fundraise, but also these urban multifamily, because the business model, that lease arbitrage business model, was inherently very similar. So depending on where these companies were in their runway and their fundraising process, that hurts several of these if they were later on in their runway. And I know of a couple that had hundreds of millions of dollars of term sheets that were pulled after WeWork's failed IPO, and that all publicly played out. And then less than 6 months later, COVID happened. So just nail in the coffin type of thing for some of these groups, which is really tough because they had these incredibly high lease obligations, lease liabilities to these landlords, multiples of millions, and their guests, their revenues went to zero. So the ones that were at the end of their runway, they immediately went bankrupt, and we all watched that kind of play out in the short coming months. The ones that had a little bit more of a leash, or their current investors were willing to kind of fund a bridge round, they got financing. I'm sure it wasn't at the best terms, and then it was immediately turning inward. Let's focus on how we can modify our current leases. Some of them had these recession-resistant clauses in there where they could potentially lower rents, and then really focusing on midterm stays and how they can kind of change their business model for future deals. And so that was all kind of right at the beginning of COVID. And that niche within the short-term rental industry, they got smoked, and not many made it out. Sonder being the largest one, the public comp right now, they're obviously getting crushed by the public markets, but it is pretty amazing how they've kind of made it through to where they are today. And it'll be interesting to see what the future brings there. But there are not many of those left. There's a couple like pirates running around in various markets, but there aren't many large players left. But it has created a pretty interesting kind of new pivot for some of these companies where they're actually trying to buy the asset and own the actual multifamily. But that still remains to be seen. Now, flipping the coin on this other side, the exact opposite happened for single family leisure players, the more rev share commission split players, the ones you think of: Vacasa, Turnkey, Evolve, AvantStay. Country shut down basically the whole month of April, the US, and then, like, depending on the market, started reopening May and that summer, and it was just gangbusters for these companies. Starting in summer of 2020, they all had record years. 2021 continued, unbelievable fundraising. They're all raising at the highest valuations. It's amazing. M&A is rampant, buying all these smaller companies all over the beach, ski, and mountain markets. The SaaS, the B2B providers are fundraising like crazy. You've got Guesty raising hundreds of millions of dollars, AirDNA and Transparent selling, Key Data raising, Price Labs raising, TravelNet. Like, it was the time to be in the industry for 2021, and then really up until about summer of 22. And Vacasa went public in December of 21. So really, they went public at the height of the mountaintop. And what happened is kind of the last 12 months, everything has come back down to earth. So we are on the backside of the mountain. Are we free falling, or has it plateaued? I think that remains to be seen. We'll see how that goes. But in terms of fundraising, the environment today, like the companies are now having to look inward and focus on financial KPIs and metrics, not just vanity metrics that helped them fundraise a year or 2 years ago. And what it did is it created an environment of kind of just being loose and not focusing on your company as a whole, because everyone thought that they were doing something super special, whereas it was really the macro environment that was pushing these tailwinds that were pushing the industry forward.
Yeah, thank you very much for those insights, Jacobie. Very, very detailed. We've got a property manager on the panel as well, in Vinayak. I know you co-founded your business back in 2018 with your wife, Vinayak.
That's right.
And we've seen that your business has expanded into Dubai and India, and is continuing to increase its supply. So, as a property manager over the last couple of years, where are you seeing those challenges emerge, and now hopefully you're getting on the right side of that?
Well, I mean, for one, we're bootstrapped, so we haven't had the luxury of going out and raising private equity or venture debt or anything. I mean, we have had a couple of conversations here and there. We've been pretty conservative, and my son says I'm old-fashioned, but I look at the EBITDA before I look at anything else. And if taking on that acquisition or taking on that growth or doing a certain bit of business isn't going to make me money or add to our bottom line, I don't take it. I don't have the vanity of we need to be. I mean, if we had to be like that, I would be 500-600 properties. We refuse more assets than we take on simply because we want to maintain that bottom line. And having said that, we still managed to 100% growth for the last 4 years. So I think well, when you look at the times today, and just picking up on what Jacob said, is you have to go back to the drawing board. I think a lot of us got lost in the last several years, especially with some of the names that have been spoken about and some of the valuations. And if you start to chase that pipe dream, if I may say, where profitability doesn't matter, cash flow doesn't matter, it's all about burning cash, you're not really building a business then, right? For me, it's more of a charity. So I think you have to go back to the drawing board. You have to understand your P&L. You have to understand your cost of goods. You have to understand the kind of customers and clientele you work with. Very important is decide your pricing and your management fee. We operate in an environment where let's face it, there is no barrier to entry for our business, right? I consider the only barrier to entry the tech stack that you've built up, and scale, how quickly you can scale with the right assets. Because if you scale with the wrong properties, you're going to scale up, have a massive churn, and then you're going to head down, and you're going to a whole bunch of overheads, which is not so great for your business. And because there's no barrier of entry, we've had a lot of competitors open up over here, and especially guys who are coming in from the UK, where they're used to working on much lower management fees because operating costs are much lower in the UK. And they've come in and slashed management fees by 50% in our region. And a couple of weeks ago, I read about one of them going into administration in the UK. So you're seeing that you have to have some common sense in terms of what you can charge. You can't just go in and charge crazy low prices and expect to retain and take care of the assets that you're managing and offering the guests the experience that they expect. Our part of the world is very different from Europe and North America. I was in Europe last week, and I was at the VRMA conference in Miami 2 weeks ago, and you can stay in a $500 hotel in Paris, and you still carry your own bags in. Nobody's coming out to take the bags out of your car and take them up to your room. In Dubai, you stay in a $70 hotel or a $50 hotel. Someone's coming out to take your bag up and take it up to your room. So it's a bit of a difference. It's a bit of a difference in terms of customer expectations. And what we talk about very often is human engagement, human capital and human engagement. Everything in I'm going to say towards the West from where we are, North America and Europe is moving more towards digitalization, automation. our part of the world, unfortunately, that doesn't work. People still want to see people and interact with people. So that's my take. And I think you've got to keep that human engagement going on, especially when we're going to go through the macroeconomic scenario, which isn't going to benefit us over the next 12 to 18 months. You need to keep the human engagement there so they remember you and they want to come back to you.
Interesting. Yeah, that's some really good insights there, Vinayak. And yeah, Woody, you've heard again the insights of our panel then when it comes to scenario planning. But you know, we talk necessarily about strong or resilient managers, and I guess maybe everyone's got their own terminology for how they would describe management. But when you're going through a crisis, how do you think the strongest or most resilient managers are able to maybe identify external factors or assess outcomes? And does it pay to take a realist attitude during a crisis, essentially?
Well, to answer the final question, I think yes, but let me come back to that. I think it's interesting. You know, you talk about a strong manager. You know, would a strong manager do this? Well, I don't think you necessarily have to be strong to set aside some time and a little effort to suss out in different ways that your future could develop. Strength in this particular sense is kind of hard for me to actually put my finger on, saying what does that mean exactly. But I would say this, that I just guessing that all of us on the panel could probably agree with this. And think of some examples, but you know, the managers who are better prepared to you know, bring their companies through tough times are probably the ones that are going to make it. Right now, there's lots of factors why that might not be the case on a case-by-case basis, but just in general, you know, to take the time to actually be ready and maybe even have some contingency plans, you know, in your back pocket, means that you have a better chance, almost by definition, of being able to, you know, to exploit that resilience if you need it, and chop and change, you know, sort of on the fly, to mix like 9 different metaphors, right? But essentially, you know, the idea of a strong manager, I mean, if you just say, what's a strong manager, you know, it's out of the blue, I'm not sure exactly how I would answer that. I have this mental picture, a manager who's sort of calming and, you know, very strong emotionally, has all the EQ stuff, and or emotional intelligence, not the quota. Yes, Karen.
I was just going to say, if I could just kind of comment on this.
Sure.
That there's absolutely no doubt planning and looking beyond, you know, this minute is absolutely crucial. And anybody who doesn't do that, golly, you know, they're making a big mistake. So you have got to think about the things that may happen and be prepared for them. But even if you haven't, I think the key thing, and where the strong manager comes in, I would describe it in a different way.
Yeah,
I would say it's the calm manager, but I would say that in order to be an effective, let's talk about effective management in some sort of crisis or catastrophe, what you need to be able to do is keep things calm. And even if you haven't got the answers, because you don't really, you know, great, you can come up with a few scenarios that seem obvious. But I think the key is, while you work it out, is to remain calm. And that to me is what a key management characteristic is likely to be. So I don't think it's strength. We could call it that. There are lots of different ways we could put this.
Yeah, and I think you make a good point, actually, that leaders can come in all different forms as well. I mean, strength could be one characteristic, but calm leadership also comes into those.
Yeah, but because just building on that, if you think of, and maybe Jacobie has got something to say about this, that really an investor, what is an investor investing in? He's investing, I think, but I'm sort of paraphrasing here for Jacobie now, but I know when I invest, I have no idea what is going to befall that business apart from the obvious. But what I am kind of putting my confidence behind is that whatever gets thrown at that manager or management team or founder, they are going to be able to figure out how to move forward. So I think that's really what I would sort of say about them, because we pivot all the time. I mean, I think when you kind of found things, it's almost, I mean, I've almost never seen a business that hasn't ended up as something completely different than what it started as.
Yeah.
You know, I don't know, look, perhaps Jacobie, take over, build me out.
I would say, and just expanding on Karen's point there, Jacobie, you know, how are you helping businesses plan for all types of scenarios when it comes to investments, mergers, acquisitions? Yeah, I'd love to hear your take on it.
Yeah, sure. And Karen, you're right. Like at pretty much all stages, like investors, acquirers, like it comes down to the people. Like who are the people running the business? What does the leadership team look like? How do they interact with these various decisions they have to make on a day in and day out? So that is always one of the most important things that any investor or acquirer is looking at. It obviously depends on the stage of the investor or the creator. If it's an entrepreneur with a brand new company or idea, then it's only the person you're investing in. Obviously, as they get later stages or whatever, it can come down to financials. But for our industry, there's people always see the PR headlines of the top 10 companies all the time, the Vicastas, Saunders, Evolves, Avances, all those, and they're getting the PR and it's great. They're doing that for a reason. But our industry is an industry made of mom and pops. There's 20,000 short-term rental companies just in the United States here alone. I'm sure there's unbelievably more in Europe and throughout the world. So when we come to these companies to discuss what an investment looks like, what an M&A looks like, all of that stuff, a lot of times they just don't know what they don't know. So we come in and we really do a deep dive analysis on this company, on these companies, and we'll walk them through what the investment landscape looks like today in their various segment of the market. We'll go over who the buyer demographics are, and then we'll do a deep dive SWOT analysis on their company. What are the great things they're focusing on? What are some things they need to focus on? And we'll really walk through the different KPIs or metrics that are of most importance to investors and to acquirers, whether it's operational, data, people, or financial types of KPIs. And like traditional SaaS and B2B software providers, they have these kind of standard scorecards that investors look at, and they have to hit these metrics and how these looks, but like there's not that for the property management industry for short-term rentals. And the majority of these founders are they're entrepreneurs that fell into the industry one way or the other. There's no college of short-term rentals or college of vacation rentals that they went to, so they're all running their company at what works in their particular small market or localized market. So we'll come in and try to standardize as much as possible. We'll work on benchmarking the various KPIs versus themselves, how they're doing versus themselves in the past, the current, and the future, and then look at how they're doing versus their competitive set as well, and kind of where they sit in the market. But it all comes down to the accounting. That is the most important part for these companies, and most of these small mom and pops, their accounting is atrocious, for lack of a better word. So that is something that I would always say, like, first thing, like if you're not an accountant or a good bookkeeper, get somebody on your side that can assist with that. Because if you don't know what's going on, then how can you make a good decision? How can you implement or measure those decisions? But yeah, that's pretty much what we'll do for companies, kind of for that first kind of 30 days as we dig in.
Thank you, Jacobie. And I hope that answers what Karen was thinking along those lines as well. I've got a few more questions I can ask on this. I'll jump forward slightly, but Vinayak, when you know, as an entrepreneur yourself, as a company that you said was co-founded by yourself and your wife as well. How have you maybe evolved as a leader during, moments of crisis in your career, or what are maybe some of the qualities of a good or resilient leader that you most admire in people?
So I think how I've evolved as a leader is, if you had asked, if I was, I mean, you go through crisis. I've been running businesses since I was 18, so over 22 years now. And I think if I have to go back to when I started to now, the difference is, when I started, I thought I knew it all, and now I approach something with I know nothing. So it's a complete flip with all the experience I've gained. And I think what that allows you to do is, and I always believe in surrounding myself with people that can head their department better than I can. If I can head their department better than them, I don't need them, because then I'm still going to be the best in my company. So I like my head of departments to be better at the job than I can, so that we can all grow significantly. And I realized that when we hit COVID, I'll give you an example. I flew back to Dubai from India, and I was coming down the escalators at the airport, and I didn't see a human being. And Dubai is the busiest airport in the world. And this was a Friday night. And I came out of the airport, my driver picked me up, and it took him 30 seconds to get to me, which is normally a 10-15 minute wait. So I called up one of the guys from my leadership team, and I said, guys, we need to meet tomorrow morning, Saturday morning. It's a bit of an emergency. And COVID hadn't hit out yet as such. There was no lockdowns that had started. And 4 or 5 of us in the leadership team met the next morning, and we just started looking at what's happening in other parts of the world. And we said, what's the worst thing that's going to happen? And someone said, Dubai is going to close down. And we laughed. And we said, Dubai is not going to close down. So we said, okay, hang on a second. Let's assume it does. What are we going to do? And because I was from the hospitality business, I have a lot of friends who are general managers. We actually had the best time ever when we went into lockdown, because the hotels all closed down, and my friends who were general managers didn't have anywhere to put their guests, because all the world closed down. No one could travel out. So I actually went to the general managers and I said, why don't you give me your guests and I'll put them in my apartments. We'll charge them a decent rate. We'll give you a revenue share back. And I promise when you open up, I will give you your guests back. We went 100% occupancy for the next 3 months, paid up front. So the only reason we could do that is because when we went into the situation, I said, hey, I have no idea what's going on. I sat down with my leadership team, and someone came out and said, Dubai is going to close down. Stupidest idea ever. We took it, found, okay, if that's really going to happen, what are we going to do about it? So I think the answer really is collective thinking and thinking ahead and out of the box.
Excellent. Yeah, thank you very much for that, Vinayak, as well. And Woody,
could I jump in and just say,
please
Vinayak,
do.
what you've just described is a scenario, isn't it? That you basically, you were only looking a few days or weeks ahead, right, rather than 10 years ahead. But you essentially visualized something that didn't quite exist yet, and said, well, if this does materialize, we need a plan for it. And so it's all kind of compressed, extremely compressed. But you did exactly what the kind of things that I try to get companies to do. If I could just for a second
please
go back to this interesting idea about the the competence of a manager, right? And where does the strength actually lie? What's important? I couldn't agree more that calm is a very important factor for especially for an investor. I think you don't want to see somebody panicked, right? But in addition to that, I would just say I was trying to think what actually could I say that brings us back to sort of scenario thinking. That is, it's openness, basically, right? It's openness to possibilities, but in a calm and unruffled way. So I want to kind of like bring these two things together. And I just want to, if I may, I want to tell a very brief story to illustrate how some senior people are not open. We've all run into people like this, right? So it's not like this is the first time you'll ever hear a story like this. But essentially, once I was doing a workshop for a company, and the way it was set up was that in the morning, all of the management team would all generate these scenarios, And in the afternoon, I would get up on stage with the CEO who had not been there in the morning, and I would present the 4 scenarios that we came up with, and he would comment on them. And I thought that will be so interesting. That'll just be, fantastic. Stupid me.
Oh.
I should have been able to see the disaster looming there, right? So at lunchtime, he sought me out, the CEO, and he said, I need to see the scenarios before I go up on stage. I don't want to be taken by surprise. I said, oh, okay, fair enough. I showed him scenario number 1. He said, no, we're not going to talk about that. And I thought, oh, okay, well, here's scenario number 2. And he went, no, that's never going to happen. No. And I instantly saw my consulting fee disappearing, right? And I also saw the whole day basically just collapsing in a catastrophe, because this guy, I guess the mentality was, and you'll see this among, the top boss of all kinds of organizations, that the mentality is, I was hired to be the guy to come up with the ideas here and to have a vision and to implement that vision. That's what I get paid to do, right? And I don't want to be bothered with any alternatives. I don't even know why they even brought me in, because this guy obviously wasn't part of the decision to have this kind of workshop done. But we saved the day by talking about the one scenario that he loved, right? Because of course that matched his vision. But it showed me that even a very supposedly sophisticated manager was totally closed to the idea of even looking at the possibility that things might not go exactly how he had already predicted. And to make the story just, short and very sweet, is that he was fired, 6 months later because scenario 2 materialized, right? And he wasn't ready for it. So just be open. That would be my definition of strength.
I know Karen's got a lot that you can contribute to the conversation, Karen. Woody talks very pertinently about planning for eventualities as well. And I know you as a business leader have had to secure investment and gone through moments where you've had to be resilient. How do you think businesses can, at the moment, we've got a lot of businesses who are trying to go through funding rounds and keep their businesses operating. So how should they prepare for the eventuality of getting that funding, or perhaps not getting that funding?
Yeah, prepare for not getting that funding. I think that is the simple answer to this. And I think that everyone on the panel really has sort of kind of shared stories about how valuations have dropped. So, if you desperately need money and you have to get money, be prepared for any idea, any notion of a valuation that you had to be slashed. Because you've got Jacobie at the other end there, he's going to knock you right down. But so valuation. So I think preconceptions, these are different times now. I think Vinayak made brilliant points about real businesses, which have the kind of some of the traditional metrics. We all understand the massive growth stories that have been and possibilities that could be. But I think focusing inward and making sure that you have a sustainable business that you can demonstrate is the only way you're going to get any money really at the moment. But I've got one little story that, just to build on Woody's. In my old top table days, I had a very famous football manager as an investor, Sir Alex Ferguson, that some of you may have heard of. And I learned a lot of lessons from Sir Alex. He used to call me his Roy Keane. I wasn't quite sure whether to take this as a compliment, but I'll take it as a compliment. But when you talk to him about football, and obviously he is the greatest football manager of all time and a great coach and so on. Once the players had gotten onto the field, he took a very detached view of it, in spite of what you might have seen on the touchline. But he was very aware that he could not impact once they were on the team and the dynamics of the game took over. So I think something that Vinayak said, and we'd all agree on, in a crisis or when a catastrophe happens, you cannot stand alone. As you may be the leader, and you may have to be the confident, calming voice that says that you have to to let other people contribute, because that also, I think, gives them comfort that they are, transparency is important, and that they have a say and an impact potentially on what the solution is. If you do this as a group, and he shared lots of sort of sports stories, and even kind of how you used to pick great racehorses. He was a fascinating shareholder, but that was how he viewed it, that he could only guide and direct, but once they were on the pitch and things took over, nothing he could do about it. It was over to them. Again, I seem to have wandered off into a different territory, but
no, that was pulsating.
One final thing. Near catastrophe, having a celebrity, as he sort of kind of is, and a lot of people are interested in him, proved to be a double-edged sword, because I was frequently fighting off bad PR stories about how our valuation was so huge and I'd lost him loads of money, and people always wanted to write about things in football and then attach our business to it. So there were times when there were not catastrophes, but there were definitely crises when the press would go after our high-profile investor. So it's not always good to have one. We love you, Sir Alex.
Thank you very much, Carol. I've heard part of that story before, but it's yes, still very, very interesting. I'm glad our audience got to hear that. We've got just a couple of minutes, so I want to get Jacobie and Vinayak's thoughts on this next question before we finish. I'll start just with Jacobie, and it's really like, for the people tuning in today, what would be your advice for people who are going through adversity? And if we're trying to end on a kind of a positive and optimistic note as well, what are the ways that people can get out of this adversity and look forward?
Yeah, so I'm a data guy, I'm a data junkie. So really start trying to make some data-driven decisions, and trying to measure some of your important KPIs and metrics for your companies. Obviously have short, medium, long-term goals, but we be willing to be fluid there as the micro and the macro markets and environment changes around you. And just to take a fun quote from a show that my wife and I love, as Ted Lasso says, "Be a goldfish." Don't harp too long on any past mistakes that have happened. There's a hell of a lot more decisions that you have to make today and in the future, and don't let those affect your decisions.
There we go. Listen to Ted Lasso then.
He has a bunch of knowledge.
I have absolutely no qualms with dropping some football or soccer references in there as well. And Vinayak, same question to you. Your advice for anyone.
So the way I look at it is, as when you're on a flight and you go through turbulence, right? And sometimes the turbulence is very slight, sometimes it's really major. You got to hold on, and you're going to get through it. And I use this, for me, it's the same in business. I come back to, being a traditional business entrepreneur, where when you hear about inflation, be the first to increase your price. When you hear about recessionary talks and slowdown in economies, be the first to start cutting costs. Being the last one to cut costs in a recession means you're going to be out of business. Being the first one to cut costs means you may be the most unpopular guy on the street, but you're going to be coming out of the recession on a stronger footing. So same goes for inflation. When inflation starts, if you're the last one to increase your price, you've missed out on a ton of margin and sales prices. If you're the first one, people are talking about inflation, they accept it anyway, and then you have opportunities to increase more. Just, I like to compare it to a flight. If you're going through the turbulence, hold on. I think KPIs and metrics, I don't really pay too much attention to them when I'm going through that turbulence, because metrics and benchmarking is great when things are at an equilibrium, but when things start going topsy-turvy, those don't really benchmark for you. So follow your gut, cut your costs, try to focus on staying as positive as you can in terms of EBITDA, and you're going to get out of it, and then you're going to be able to start growth again.
Thank you very much, Vinayak, and a big thank you to all of our contributors, to Woody, to Karen, to Jacobie, and to Vinayak. Some excellent pearls of wisdom and some very engrossing anecdotes there as well. And we had so more questions that we could get through. I just saw that we've got a question in the Q&A function from Richard Vorton. So if our speakers can see that before we close off, if you'd like to just type out an answer there for Richard, and we'll try and get that question answered for you, Richard. So we're back for our next webinar, sponsored by Wimstay, on Wednesday the 28th of June at the slightly later time of 5 p.m. BST. It's called Thriving in Short-Term Booking Windows, and we'd of course love you to join us via the sign-up link in the chat now. We at IHM are building up to our exciting annual Urban Living Festival in London on the 5th and 6th of July. It's a fantastic event bringing together urban innovators, investors, all the like, at the cutting edge of contemporary hospitality, real estate and living. And that's at East Winter Garden in Canary Wharf. So again, you can book your tickets now in the link and in the chat function. For opportunities to work with us, please do contact my colleagues Katie and Steph, whose details are on the screen for you now. Big thank you again to Price Labs and Minute for sponsoring our webinar today and our whole series. This session will just stay open for another 2 minutes as well. If you need to jot down anything that we've been discussing in the chat, we've got all of our speakers' contact details there. Do also contact us via our various channels you can see on the screen now. Big thank you once again to our speakers and everyone who tuned in today, and we'll see you all again very soon. Thank you very much, everyone.